Hey guys, if you're ready to buy a house and you're about to reach out to a lender to start the pre-approval process, make sure you watch this video till the end. I wanted to do a quick video and just give you a heads up so that you know what to expect when you talk to a loan officer with your initial consultation, the application, the pre-approval, and all that stuff. So let's jump right in. So whether you already found the house that you wanted to submit an offer on, or maybe you're looking to purchase a house in the next couple of months, it's always good to reach out to a local loan officer, a professional in your local market as soon as possible. Okay, I always advise, even if you don't have a house yet, the first step would be to start with the pre-approval process and know your numbers going in. And the first thing you want to do is get in contact with the loan officer. So whether you found them online, saw their reviews, or maybe your agent referred you to them, make sure you call them or text them. Get them on the phone. You need to have a conversation with them, okay? So one of the first questions that a loan officer will ask is, what are you looking to do? What are your expectations? What are your wants, desires, needs, fears? What are you, just basically answer any questions you might have. We can pretty much Google anything right now, so there's a lot of misinformation out there as well. So you want to have a conversation, a goal, and then the loan officer is going to go over some basic questions, reviewing, asking you about what is your credit score, what kind of income do you have, how much money do you make, how is it structured, is it base, is it bonuses, overtime, commissions? Because it's a little different, right? If we want to use bonuses, commissions, or overtime, we can use it even if it was with different employers, but we have to average it over 2 years. If you have a history in your line of work and you have the same bonuses, let's say with the previous employer, we can use it as long as we can average it over 2 years. If you don't have a 2-year history and you're self-employed, for example, then we cannot count your income yet. So there's a lot of questions, and we'll dig in deeper into that situation, see if we can use that income or not. But the basic questions are income, assets, and credit. What kind of credit scores do you have? Do you have higher, above the minimum required credit scores, which right now are 620 on a conventional and 640 on an FHA? And if you have, what kind of employment do you have? How much money do you make? For example, if it's a husband and wife situation and the husband makes 50 and the wife makes 50, combined that's 100. So you can probably look at a house in a 400 price range. But if the wife is a teacher, for example, for many years, and the husband just started his own business a year ago, we can't use his income yet. We have to have a 2-year history. So we always ask for these questions, kind of see if we can use that income, ask about the assets. How much money do you have today? We can't count any future income coming in, but we need to know how much you have in your account, in your checking account today. How much do you have in your savings account? Do you have any retirement accounts? Do we have an option to maybe get a gift from a family member? All of these can be used. So after having a discussion, we get a general idea like, okay, that sounds doable. Everything sounds great. And, if you have someone else with you on the loan, the spouse, it would be good to have them on the conversation as well. Conference call or a Zoom call. It's good stuff. We want to make sure everyone is on the same page, and we have good communication going forward. So the next step would be to submit an online application and then provide the documents. Okay, the documents we always ask for are some form of ID, 30 days of pay stubs, 2 months of bank statements of all accounts, and tax returns for the last 2 years and W-2s. So for the most part, you can usually submit an online application with pretty much any lender out there. It could be online, it could be over the, they can take your application over the phone, or you can do an application in person. Mostly what we see is basically applications online. So you would go to the website, fill out the online application, and we always advise to fill it out as best as you can. It doesn't have to be perfect. Okay, so if you have some questions or there's a couple fields that you weren't sure on how to complete it, that's okay. You can leave it blank. Just make sure you go through the whole process, do the best you can, give us all the correct information as best as you can to your knowledge, and then hit the submit button. This way, that application comes across on the loan officer's side. We can then go into your application, we'll call you up, and we'll go over the application again. And at that point, we'll make sure we fill in any areas that might have been left unanswered. Okay. We also would like to review at that point your documentation. So make sure you have the tax returns, the pay stubs, the W-2s, and your bank statements. Okay, we want to make sure that if you said you had $20,000 in your checking account, we need to get a checking account to support that. If you said you had another 40 in the savings, we want to make sure you have 40,000 in the savings. And then basically based off of that, we're going to review everything and come up with different products that would be good for you, based on the conversation, based on your goals. You want to make sure you get a good loan that fits your needs, right? And if you've done some research online, if you Googled stuff, you might know a little bit about some stuff. It's just enough to be dangerous. So the loan officer, his job is to get you into the right loan product. So once the application and all the documents have been submitted, the next step would be to get on the call, either do a conference call or a Zoom meeting. If it's a husband and wife, then make sure you're both on the call. You want to go over a couple different loan products, right? The loan officer should be able to present you a couple different options, FHA, conventional, a couple different rate options. So at this point, you want to basically be available to and write down any questions, right? There's no such thing as a silly question. So make sure if you do have any questions, you ask them, right? I mean, we're here to help. So you can always ask the lender, hey, why FHA or why conventional? What are the differences on the interest rates? And at that point, you should be able to get at least, 3 different, let's say, it's a conventional loan and you're doing 10% down. The loan officer should be able to present you with 3 different rate options. You would get a rate at par, which means at no cost. Then you would get a rate with points discounts where you basically prepay the interest with to get a lower interest rate. And then you can get the third option with buying it down a little bit more. You have to look at least 3 different options. And then at that point, the loan officer should go over the differences in the monthly payment, the estimated projected monthly payments. Just keep in mind, guys, a lot of times, when we tend to think about the full mortgage payment, which is PITI, principal, interest, taxes, and insurance, a lot of times we think that only the interest rate is what impacts the monthly payment, and it's not. It's the loan amount, the interest rate, which can change depending on if you want to pay more in closing costs and buy down the interest rate, because maybe you'll be living in a house for a longer period of time. If you plan on selling the house in the next 2-3 years, then don't buy down the interest rate, save on the closing costs. So that's something that the loan officer will go over with you. Then you also want to look at the estimated homeowners insurance. That can change depending on who you choose. The taxes in Texas, that can change dramatically. We have tax rates over here from 2.1 to 3.8%. That's easily a few $100s difference depending on where you find a house, what kind of tax rate you have. So when you work with a loan officer, we also want to make sure we communicate with your realtor to guide you in the right direction, right? To say, hey, am I okay with this monthly payment? And you want to look at the mortgage insurance as well. It's usually not as bad as you might think. It's dropped over the years, where the PMI is not that bad. I know everybody thinks that it's the devil, but it's not all that bad. It saves you a lot of money with the down payment. So just look at the different options. If you do have an option to put more money down, see how that affects your bottom line. And when you call the loan officer, a lot of times the question is, what is the maximum I can qualify for? I don't like that question personally. I always think that you need to have a price range in mind. I don't like to stretch it all the way in the top, because if you do come back with a house in an area where the tax rates are higher, that might kill the deal. That might put you over the ratio. So I think that most loan officers should be able to give you that information as well and say, hey, this is on an average tax rate and it can change. So if you have a specific house at some point down the road that you want to submit an offer on, call me, text me, shoot me the property address, and we can update it, rerun it based on that particular house and that tax rate to make sure it doesn't kill the deal for you. Okay. I hope you find this very helpful. Make sure you check out my next video in the process. And if you have any questions, please leave them in the comment section. I'd love to get your feedback, and I'll see you in the next video. Thanks for watching.